Hello, and welcome to the Blockchain.com podcast. My name is Nick Carey, co-founder and vice chairman of Blockchain.com. From the intrigue surrounding Satoshi Nakamoto to the rise and fall of Mt. Gox, Web3 innovation, and crypto regulation, crypto's journey to where we are today hasn't been straightforward. In our latest, The Story Of segment of the Blockchain.com podcast, we'll chronicle the journey by speaking with some of the most influential people in the space, the entrepreneurs, the pioneers, advocates, and investors. In today's episode, we're exploring how the development of Bitcoin has made us question our relationship with large financial institutions, banks, and more, and how much we trust we have to place in third parties to look after our wealth. So today, I'm really excited to be joined by Will Harborne, CEO and co-founder of Rhino.fi, a DeFi aggregator from one self-custodial platform. Is here to highlight some of the issues around centralized finance and how decentralized finance may help us find some of the answers. So, Will, thank you so much for joining us today. We have a little tradition around here. The first question we always ask is, how did you earn your first buck, your first pound? We want to hear a little bit about how your relationship with understanding money sort of evolved.
Cool. Yeah, I think it's a great starting question. So actually, the first money I earned was actually dollars, even though I'm from the UK. And I think I probably wanted to be an entrepreneur from a very young age. And like many people who grew up with the internet, I was basically hustling online from probably around age 12 or 13. So I think I started off actually doing probably a lot of the tasks that people would now ask ChatGPT to do on some online forums. So, for example, I would reword blog posts, sort through data for people. It was pretty menial to start with. I got into selling, kind of through that, I got into selling like accounts and accessories for some online games, like RuneScape, which I was getting paid for all this stuff through a PayPal account, which kind of was probably a bit of my exposure to like I didn't have a bank account, so that was like the only way I could really get paid for stuff. And then by sort of 16, I was sort of making small websites, basically with sort of free online flash games and earning some money from Google AdWords, which was kind of fun. But yeah, I think I then got a full time job as a programmer at age 18, and that was that.
Cool. So, almost basically early stage NFTs, online gaming, building up reputation for characters. That's a cool story. Thanks for sharing that. So, from building up your sort of small little empire of online businesses to going more onto the technology side of building companies, when did you first become interested in crypto and digital assets? What was sort of your journey to learn more about that?
So I think I heard about Bitcoin when I was still at university, pretty early on, around 2012, and bought my first Bitcoin just out of interest. Really, I think I found the concept kind of curious, but didn't really excite me at first glance. I just thought, oh wow, this weird thing. It was on a chat forum again, similar places where I had been hanging out for a while. WTS, BTC. And then I heard later from a friend who I was doing an internship with about the Ethereum white paper, and also he told me that a bunch of the Ethereum team were in London, which was very close to where I was studying in Cambridge. So we went down on the train and found this very weird looking place in East London where there were a bunch of developers basically building this weird thing. So I got pretty hooked in at that point. Ethereum compared to Bitcoin, at least for me, was a lot more interesting as an engineer. The fact that you could actually build applications. I think I was probably kind of naive in retrospect in terms of the way I thought about it, but this idea that people talked about at the time and still do talk about of being able to build any business in a sort of a decentralized way, things like that are actually kind of far fetched, and we still haven't done it. But things like decentralized Uber, completely removing banks entirely, were the things that really excited me about it. I started coming down a lot, going to sort of hackathons, playing around with Ethereum as soon as it launched, kind of mainnet, and from there I was kind of basically down the rabbit hole. And in retrospect, a lot of those ideas were kind of, I think, the precursors of things that are maybe now happening, but it was a little bit early back then.
Yeah, the science fiction always does sort of lead before the reality. Let's have our listeners maybe hear from you, sort of defining, how would you describe Bitcoin to somebody new, and how would you describe the sort of ambitions that Ethereum has, and how it's quite a bit different? Because I think, as someone that went through the journey yourself and has been in the business and industry now for a long time, I think that'd be a super interesting perspective to hear.
Yeah, for me, Bitcoin was the concept of a completely free and open, decentralized money that's not owned by anyone, that's fully open source, and that anyone can contribute to and own, and is permissionless. And that in itself, obviously, is an exciting concept, especially if you're maybe from a place where you don't have um, a, a banking system or a financial system that you trust. I think for me, it was definitely interesting, but I'd never experienced. I think at that time the real fear of, like, I don't know, my bank account being closed down, or experience many issues with the UK, banking system, which is pretty good. Um, but of course, now today we can see, with many banks like Silicon Valley Bank and Credit Suisse, even, and many others potentially threatened, that concept itself is a really powerful one, and it's one that I obviously really believe in as well. But I think the concept of Ethereum, which was taking that basis point of a money system that you can actually permissionlessly pay with, but adding on top a programming language, was the thing that really got me excited, because that meant you didn't not only did you have this free and open internet money, but you also had then a system that developers, engineers could go and build an entire new financial system on top of. So you couldn't just send someone money, but you could also write a whole program that says, if this happens, then send money to three different people. Or you can create trading systems where you swap one asset for another, but only if both parties actually send the money, and if they don't, it fails. So that sort of ignited the imagination a lot more. And I think it's the fact that you can build all sorts of businesses, not just pay for things.
I think that's really nicely sort of explained. So Bitcoin is, sort of inspires a new way of thinking about how we can exchange wealth on the internet. So a decentralized peer-to-peer electronic cash system. And there are a lot of reasons why that might be very useful. And I think in the last 3 weeks, we've learned once again why that could be the case. And so we're seeing at least the sort of experiment of Bitcoin really being battle tested in the market today. But Ethereum has sort of a much wider remit, and it's essentially to support the building of all kinds of decentralized applications, far beyond just the transmission on a peer-to-peer basis of a monetary unit, but actually of precious information and much more that can then be programmed, and some people call them smart contracts, but just complex agreements executing over the internet. So let's talk a little bit more about that, because we're sort of seeing again, failures of centralized finance. In the last few weeks, we've had the collapse of two of the largest financial institutions in the United States' history, with Silvergate and Silicon Valley Bank, and then also Signature has also collapsed, and there's many other banks that are on their knees now. In Europe, Credit Suisse has gone down, and so Ethereum's really been focused on this sort of decentralized finance over the past few years. So, in your own words, what do you see as the major issues with centralized finance that decentralized finance can really work towards solving?
Yeah, there are quite a few things, but I think can kind of summarize it down to probably just three major points. Um, and I think looking at Bitcoin, it really does. I mean, the very first block of Bitcoin, of course, said chance we're on brink of second bailout for banks, and that's potentially the situation we're going towards again today. We've seen it in the cryptocurrency space, where you have things like FTX again, where the exchange doesn't have all the assets to back what they say they have, and then users end up losing their funds. And so the first point, which is really clear, is this sort of transparency point that decentralized finance brings. So with these centralized systems, whether it's centralized cryptocurrency exchanges, whether it's banks, a lot of it's very opaque. And as users of these systems, whether it's that you have your money in a bank account or you're using a centralized cryptocurrency exchange, you don't know whether they really have the funds to back what they say they have. You don't know what else they're doing with the assets that they're holding on your behalf. and you're then completely reliant on it. And this is a story that we've seen again and again in the whole history of money, but especially in the cryptocurrency space, in the modern banking system, where uh, often we do trust these institutions, but then they let us down. So FTX, Celsius, Silicon Valley Bank, just in the last year, basically, but many more examples. So number one is that transparency, because these decentralized systems, which are based in code and are transparent on the blockchain, are always visibly auditable. You can literally even write code which will continually check that they hold all the assets that they're supposed to hold and that it backs what users have deposited. And that's incredibly powerful. And often it's sort of not even, it's sort of taken for granted with DeFi, but that's, I think, the number one point. The second is the reliability as well. So decentralized systems, smart contracts, applications that are launched on a blockchain, whether that's Ethereum or any of the other blockchains, are always running. They're always available. As long as you have internet and can access the chain, you can get your money out, you can transfer your funds, you can swap. You don't need to wait for the bank to open on Monday. You don't need to hope that they haven't taken down their website. There will be ways to access, and the best decentralized financial system finance have like multiple websites that are hosted by anyone, where you can have multiple ways to access. And then the third is, I think, really the more philosophical and long-term point for DeFi, which is financial freedom. And that's that it gives us complete choice and control over our own assets. No matter where in the world you're from, you can access these systems. And I think that's the thing which today we're seeing the most use for, is that many people who maybe don't trust their local currency or don't actually have access to many other forms of financial inclusion or ways to increase their wealth can start doing it with DeFi. And I think that's the thing that's really going to sort of lead long term to these systems winning out, is that it gives people so much more control over their finances.
So to summarize, number one, transparency to combat against problems with trust in these opaque systems. Number two, reliability. So an always-on capability for people to exchange precious information and form agreements over the internet. No settlement windows, no worrying about bank holidays. It's just like the internet. And then the third one, grounded in sort of the principles of human rights, having the ability, regardless of the circumstances of one's birth, to be able to do things like sending, receiving, securing, trading, and exchanging digital forms of instruments of wealth. And so those are sort of the three things that make DeFi so compelling. So thanks for summarizing that, Will. Let's talk a little bit about your business. So talk to us about the name Rhino.fi. For anyone that's a noob out there, help us understand a little bit more about this.
Yeah, awesome. So we actually used to have another name, which some people might be familiar with. We were called Diversify when we first launched. Kind of difficult for people to spell. So we ended up changing to Rhinofi, and our logo is also of a rhino. We're an aggregator for all the different opportunities that are available in DeFi. So when DeFi first was created, and that's kind of something that's happened over the last few years gradually, there wasn't much you could actually do. There were a few different exchange protocols where you could maybe swap stable coins for Ethereum and a few other tokens. You could borrow and lend maybe on one or two protocols like Aave and Compound. But that's really exploded and ballooned over the last few years. You now have 10 or 15 major chains, a lot more that are less common. You have thousands of tokens, thousands of different protocols for everything from borrowing and lending to trading derivatives to much more complex forms of financial systems that are sort of all linking together different protocols. And so it's become very difficult to navigate. You really have to be kind of an expert to try and use a lot of DeFi. And it's very easy to make a mistake, to lose your funds. And it's very hard to tell actually what's legitimate and what's not, because there are so many scams out there. So many people have been burned in the past. And so for Rhinofi, as an aggregator, we basically have built a platform where you can access all the best parts of DeFi without needing to go through these hundreds of websites, hundreds of different bridges. And so, for example, you can access the best yields on the top chains, the top Ethereum rollups. and move between them very easily with a click of a button. You can swap tokens across many different chains. You can bridge to different chains if you want to move your assets. And we have a team that kind of sources and researches across all these different blockchains, finds the information and presents it to you, so you can spend less time making the decision about which opportunities you want to go into and how you're going to get to them, and actually just make sure that you're not missing out. And importantly, it's completely self-custodial. So you come to Rhinofi and you connect an existing wallet, whether that's MetaMask or a hardware wallet like Ledger, and then you can access all of this from that wallet.
Cool. Okay, so would it be safe to sort of characterize it almost like a discovery tool or a search engine for DeFi or something like that for first-time users?
Yeah, I mean, we think of it actually, and this is an analogy we use internally as kind of a Netflix for DeFi. So
Got it.
we can present opportunities for you based on the assets you've got, and then we can help you get to them. So if you want to get staked yield on your Ethereum, if we can get you into staked ETH. If you want to go and earn on USDT on a particular chain, we can also help you do that. If you want to go try out ZK Sync, which is, for example, a roll up that just launched, we have a bridge that can get you there. And you can move funds. So trying to basically get you closer to all those opportunities.
Okay, cool. So let's say I'm really new to this. I've heard about Ethereum. I know it's the second biggest sort of crypto by market cap, but you just said a bunch of things that may sound a bit intimidating to someone. So walk us through what the difference is between swaps, yield, and staking.
Okay, absolutely. So swapping is kind of in a way, it's the first thing that happened when DeFi was created. We got decentralized exchanges. So if you hold Ethereum and you want to get any other token, you have to swap through a decentralized, or if you want to do it in DeFi, you swap through a decentralized exchange. So if you come to Rhinofi, we will tell you that you can swap your one Ethereum for a certain number of another token, for example, Matic, and then we'll present you the price that you'll get, and you press send. You would then basically sign a transaction with your wallet, which would say you will send one ETH as long as you get back a certain number of Matic. And that's the only thing that can happen with your assets once you sign that transaction. But once it's signed, it'll be broadcast to the blockchain and you'll get your Matic tokens in return.
Right. And you don't have to worry about a centralized exchange like FTX or something else sitting on the custody of your funds where you don't have transparency over what's happening with that trade or that brokerage, basically.
Exactly.
So that's what a swap is. Okay, cool. We got that. Tell us a little bit about yield.
Yeah. So yield is more for kind of long-term holders. So let's say you've already got some Ethereum. You can earn yield on that, and there's many different ways you can do it. This is essentially like earning interest on funds in your bank account, but the interest is derived from different sources. The main one for Ethereum is staking. So Ethereum is now transitioned to proof of stake from proof of work, which means that if you're an Ethereum holder, you can actually earn a return on your Ethereum for helping secure the network. And so that's the most popular way today of earning yield on Ethereum. And normally you have to, for example, run a server, deposit your ETH, and then you'll be helping to secure the chain. But there are popular protocols now called liquid staking, where without having to run the servers yourself, you can essentially delegate your Ethereum to someone else. So that's one of the opportunities that people do. And you can also earn yield on things like USDC and other stable coins, and many other assets.
Cool. All right. So by visiting Rhino.fi, I can basically do all that without having to worry about a third party or a counterparty at all. Cool. Makes sense. Okay. So talk to us a little bit about how you help first-time users navigate Rhino.fi. So how do you make it more accessible? And what are sort of your focuses on the product side to make it easier for new people to gain some comfort and figure out how to navigate your platform?
Yeah, I think this is actually one of the hardest things for all DeFi protocols. And this is really the reason that we are trying to exist, is because it is really complicated and difficult for first-time users to use a lot of DeFi. So we've focused a lot of our team on the kind of user experience and trying to make it as simple as possible to do this. But ultimately, it's all about trust building, because when you're moving funds onto a new protocol or platform, especially with the experiences people have had in the last few years. You really want to know that you can trust it and that your funds are safe. And so we focus on really presenting the user the information in a really simple way, and often allowing you to sort of try something out with a small amount of funds before you put a larger amount in. But this is something which I think we're starting to get better at every day, doing a lot of user interviews, really sort of trying to map the different types of users as well, because there are really there are some people in DeFi who are much more experienced and are willing to just go straight for something, and others who really want to read about it a lot before they try.
Yeah, tell us a bit about maybe the profile of some of the community members that use your platform. Or it's DeFi being kind of an always-on global phenomena. What are sort of the are there parts of the world where there seems to be more adoption? What have you sort of learned?
So I think we probably, when we started off launching Rhinofi, really assumed it would be. I think because a lot of our team are from like Western Europe, that would be maybe where our audience would come from, and we quickly learned that wasn't correct. And actually, today I think our biggest audiences are often from sort of Eastern Europe, places like Turkey, Hong Kong, and many places in Africa as well. And I think that probably sort of gives a bit of a hint as to why a lot of people are using and starting to explore DeFi more. Often, I think it's very visible that the countries where we have the most users um, actually are where inflation has been high for a long time. And of course,
Yep.
inflation is rising now everywhere, but that's a newer phenomenon for maybe the US and Europe. But it's something that's been the case in places like Turkey, which for a long time was our number one sort of location of users. Um, and really, DeFi is this kind of raft that people can use to help escape from maybe like a less good financial system or high inflation or a less good local currency, to be able to protect their money and still earn some rewards and interest on it. And that's really where we've tried to position ourselves up to serve now, like especially having seen that evolve over the last 2 years.
That's super interesting. Yeah, and so many of the places you just mentioned, it doesn't take a lot to persuade them or users in these countries that having more financial control and sovereignty over their assets and income makes a lot of sense when there's been such failure in the and trust from the traditional financial service providers in those countries. Cool. That's super interesting to hear. All right, so besides better user experience, what do you see as the kind of broader adoption barriers that the industry and your team need to sort of concentrate on over the next few years?
So the thing that really motivates me and motivates our team is the idea that we're actually building a new financial system that's useful for everyone. And a lot of the infrastructure of DeFi has proven itself over the last few years. So the fact that we can do decentralized exchange, the fact that we can do borrowing and lending protocols is great. And actually, it's proven that it can work at scale and that lots of people can use it. The problem has been for a long time that the assets that we're using in these systems are still pretty speculative. Often the kind of value of them is questionable. So a lot of meme tokens, for example, which have been super popular, it's hard to really argue that these are the safe alternatives people need from their local currencies, or that can help them escape from inflation, especially when the price can go up and down 30% in a day, or however however much. But that's, I think, something which we would like to see changing. So using the same infrastructure that we've already built, the fact that you can transfer instantly all over the world with these assets, the fact that you can earn yield, that you can swap without permission, and that it's transparent is great. But now we want to see more real world assets used. So we have things, for example, like stablecoins, USDC, and there are some now starting to be other assets that are similar. So gold-backed tokens, other commodities. In future, I think we'll see stocks and shares issued on chain. You can have tokenized versions of bonds and also loans, where you start to earn interest based on real world loans. And I think these are things which we'd like to see happen a lot more, to give people a wider choice of assets that are linked to the real world and linked to real value, and but then used within the same systems that we and others in the DeFi world have been building. And I think when that happens, I think we'll feel a real sense that actually this is a valid alternative now to the traditional system. It's not just this separate bubble with all sorts of speculative assets.
I think that's such a great point, which is like, even if you are concerned about the use of one specific crypto token or another, you can't figure out which meme token to use or not. If you want to use digital dollars, or you want to use a commodity based or a hard asset backed digital asset, you can do that now. And so even if you come at crypto with sort of a gold bug mentality, or you actually just like dollars, but you live in Turkey and you can't get access to a US bank account, with stable coins, you can. And so basically what you're describing is access to a whole bunch of what would previously have been very difficult to unlock financial services that now anyone at the touch of their fingertips has access to. I think that's a really, really good point. Okay, so obviously it has been a strong start, especially for Bitcoin and Ethereum at the beginning of this year. What are sort of your predictions for 2023, and what are you looking forward to this year? And if you look back, at the end of this, what will you sort of see as being a successful year for your team, and also just for the DeFi industry generally?
So I think 2023, at least for us in the niche we're in, is going to be a very big year. And we've already seen that the last month has been our highest ever user numbers since we launched, despite the fact we're in a bear market. And that's mainly been driven by the fact that in the Ethereum ecosystem, we've got now the launch of so many rollups. So the chain, like basically scaling is happening. So we've had for a while a few different rollups live, like Optimism, Arbitrum. We've now had ZK Sync and Polygon ZK EVM launch in the last week, and there are many more launching this year. So we're almost going to have so many different ways of scaling Ethereum that we won't know what to do with them. It's almost, what are the applications going to be that run on here? But for Rhinofi, that's really our bread and butter. We're able to help people get and explore those new chains, those new rollups, and we have bridges to them. So that's partly why we've already had a very busy year, and I think it's going to be another busy 2023. But the real question is going to be, I think, which of these rollups get the most adoption, and what will it mean for other chains? Because we've seen over the last few years a lot of adoption of things like Solana and Polygon and others, which aren't necessarily full Ethereum sort of compatible chains, but now Ethereum can scale as well. So I think that's going to be a really interesting question for 2023, and something which we're helping our users explore but can't answer ourselves.
Cool. Yeah. So what Will's sort of referencing and has been a major challenge in our whole industry broadly over the last decade is, while there's been a lot of interest, sometimes the capacity of the networks hasn't been technically capable of even onboarding the level of activity that we all are hoping to achieve someday. And so one of the coolest things about DeFi and crypto generally is that these networks are being built on by thousands of engineers globally in an open source format with thoughtful peer review, and they're upgradable. And that's a really big deal. Most of the traditional financial services industry spends billions and billions of dollars just doing basic reconciliation and keeping legacy systems online, but not improving them. And so the hard work of thousands and thousands of engineers around the world to maintain these systems is really coming to bear this year. And so I think the future is very bright, at least on the scaling side, which has been a huge challenge for our space, and one of those not necessarily sexy topics, but an extraordinarily important one if we're going to onboard billions of people to be able to do things like protect their wealth and exchange value with each other. So, Will, thank you so much for joining us. I really appreciate your perspectives and the way you talk about these concepts. And we wish Rhino a lot of luck this year. So we'll keep an eye on that.